Natural gas prices plunged yesterday after Freeport LNG said an export facility would be offline until late this year. That eased fears of sky-high prices for the coming winter months, at least in the United States. Joining us right now to talk about what's working in the energy sector is Rob Thummel. He is portfolio manager at Tortoise. Also, Amrita Sen, who's the founder and director of research at Energy Aspects. And Rob, let's just talk about this explosion at this facility. This was an export facility, meaning we are not going to be able to export natural gas for months. And maybe that's good news for people here in the United States, lower prices. What does it mean overall for the global market and the people who are waiting for this exports?
Yeah, good morning, Becky. It actually created kind of an interesting element. So in the U.S., it created an oversupplied natural gas market because Freeport LNG typically buys natural gas and then exports it to Europe. So that's why prices in the U.S. decline. However, globally, it actually created an undersupplied market because that exported natural gas now is not available to other countries around the world. And it can't really be replaced. So while U.S. prices declined, prices in Europe actually increased by about the same amount, by about 16% yesterday.
Hey, Rob, is there any chance that the White House is looking at this and saying, if we stop exporting, this could solve a lot of our energy woes?
Well, that's always an option, but I really just don't think that that's going to happen. It might solve some woes domestically, but internationally, it would create a lot of chaos.
Yeah, Amrita, what do you think about this? I mean, it's just such an interesting example of what happens. We do have a lot of oil and natural gas in this country. It's a global market. We have friends in Europe who we're trying to help out because they're being squeezed by the Russians right now, too. But if you're the administration, you're up against an election and you see how quickly that can knock down prices. Are they tempted to kind of mess with it?
I mean, look, like you said, this is a global market, right? So it's not necessarily a permanent solution. And this is an outage. It's an unforeseen outage. The bigger problem, at least on the oil side or gasoline prices in the U.S., is the lack of refining capacity. That's just been years of weak refining margins. And then COVID, that's led to these refinery closures. So even if the administration were to come out with some form of limiting product exports, which I know they are at least considering, not saying that's going to happen, it's not going to really change anything, especially given the dynamics in the U.S. where it's really the East Coast that needs a lot of products from Europe and other parts of the world, whereas the Gulf Coast tends to be oversupplied, right? So yes, there's the Colonial Pipeline, but most of it is full. So any kind of product export ban or crude or LNG export ban, these are temporary measures. They don't really go to the heart of the problem, which is underinvestment for 8 years, really. And the fact that now ESG metrics are just not incentivizing more investment. That's what needs to happen ultimately.
That's a really interesting point, too, the fact that we are reliant on gasoline being refined in other countries, whether that be Europe or Canada or somewhere else. If we start saying we're not going to export anymore, aren't they likely to retaliate and say, fine, we're not exporting gasoline back to you, too, Amrita?
I mean, gasoline imports, of course, for PAD 1, that's kind of the key thing. Gasoline exports are mostly to Latin America. So trade flows will be different. But yeah, diesel will be the one to watch out for because Europe does get a little bit of diesel from the U.S. The critical thing is going to be if the U.S. were to stop gasoline or diesel exports, the price internationally, just like we've seen in natural gas, will shoot higher. So East Coast, when it has to import those products, will just have to pay a much higher price. So that's actually going to be detrimental for consumers.
Shepard Smith here. Thanks for watching CNBC on YouTube.